Hey, Scott, good to see you. So 4,100 on the S&P 500. If you think about the last couple months, we first tested it on December 1st, then we tested it again on December 13th, that CPI day, both of which failed. And then we broke above it last week following the FOMC decision. So you have this classic case of multiple tests of resistance. It broke out. Then we came back yesterday, tested it, and held as support. But the issue is if we break back below it after several tests, you get, what we really consider a false breakout. And, from false moves in one direction can come fast moves in the other direction. So that's really the concern for bulls here. It's, they haven't necessarily done anything wrong to this point, but we think some of the macro issues on the market suggest it actually probably will break in the coming days. And that's the risk here.
So you're not ready to declare the bear market over? I mean, you sound like you're not a believer in this move.
I don't think so. I mean, I think, you look at where the market is, it's still, maybe 150 points below where it was at the August peak, which in hindsight was also not the end to the bear market. And then from the August peak, we sold off about 700 handles in about 6 weeks. So, things can change quickly. I think that the key issue for us here is that the entire duration of this bear market has been the stocks market's been an inverse correlation to the dollar, right? So if you think about from January to last September, dollar rallied, stocks sold off, dollar peaked in late September, stocks bottomed, and then so far the dollar's put in a bottom last Thursday, and since then stocks have seen some volatility. And so, unless that correlation changes, you really need to see a weaker dollar to continue this equity rally. And we think the dollar is in a pretty good macro support. Also, you have tailwinds from the bond market and what the Fed has been doing and saying. So, we don't think there's a ton of downside for the dollar. And if there's not a ton of downside for the dollar, it's tough to see a lot of upside for equities here.
You really don't see the dollar as continuing to weaken? I mean, it kind of just started, right?
Well, it had a pretty big pullback for currency terms from September to last Thursday's low. And then again, if you look at kind of the 5 to 10 year chart of the dollar, 100 on the dollar index, 100, 102 in that area, pretty good long-term support. So it would take a lot, I think a pretty big regime change to break under that level. And again, when you have, real rates and Fed fund rates, pushing up to, in the case of Fed funds to new highs this week, that continues to suggest we probably have upside pressure in the U.S. dollar.
I suppose technicians can read charts differently. Maybe they look at the same thing and they come away with different conclusions. Now, I raised that issue because it was only a couple of days ago that Mark Newton of Fundstrat, their technician, was sitting next to me suggesting that this rally has legs and that technology has big legs. Do you disagree with that second notion about this run that we've seen in tech being able to carry the market further?
Well, look, tech is still the largest part of the market. It underperformed for the majority of last year, and it's been outperforming the majority of this year. But I think if you look at some of those structural trends, both in absolute and relative terms, they are coming into some pretty key resistance levels. And, look, we take a weight of the evidence approach. If you were to look at some charts purely in a vacuum, you could argue they're starting to potentially see a bullish trend change. But we can't ignore the fact that correlations do exist. The macro environment is still the dominant trend for markets right now. And when you put it all into kind of the macro cocktail blender, it still doesn't paint a rosy picture for us. But, look, if we mentioned that 4,100 level, if we spend some more time below that, and especially if we're to break out above 4,200, that would be another, hit to the bear case. So it's going to be an interesting week, especially as we head into CPI next week. I think we'll know a lot more.